Hello everyone, welcome to the learning session of Trade Ops. Today we'll be discussing about DVR shares. So most of you might have heard this name before, and if not, no worries. From today you can easily judge which share to choose, a DVR share or an ordinary share of the same company. So let's get started. So what are DVR shares? DVR, which stands for differential voting rights, is same like ordinary equity shares, but with less voting rights to the shareholders. So, like if you are taking a DVR share of a company, you would not be getting the same voting rights which an ordinary shareholder gets. So, I hope that you would be clear how they came up with this DVR name, right? So, the very first DVR share was issued by Tata Motors back in 2008. Later, other companies like Gujarat, NRE Coke, Jain Irrigations, they also came up with the same DVR. But don't go on the name of this Gujarat NRE Coke. This is not the Coke which we drink. Like here, the Coke refers to a form of coal which is used in steel industries. So this was the very first Tata Motors was the very first company to bring DVR in India. Well, now let us understand that why there came a need of like DVR shares. There were already ordinary shares floating in the market. So why did companies introduce this DVR shares for the same company, right? So let us first understand from the perspective of company, like why they brought this shares. So for them, it's a obvious reason, like they wanted to raise money. So for raising money in the market, like uh, maybe this could be like the money raised would be used for like any other larger projects, to fund any larger projects, or maybe to open a store or something. So for companies, this was like obvious reason that they wanted to raise money, so they gave came up with this DVR shares. But there is a constraint out here, like the management of the company, right? They don't want to give the control of the company, right? The complete control of the company to these shareholders as well. Like in ordinary shares, you already have the voting rights, right? So here they don't want to introduce that as well. Like if they are paying, generally what happens is that these DVR shares, they are priced lower. Like if it is compared with the normal shares, so they are priced lower. So at a lower price, if you are getting to be a part of the same company, so in that scenario, uh, the management don't want to give you the same equal rights, the same voting rights, right? Which is actually like for small investors, it doesn't matter much, but generally for bigger investors, this voting rights is one of the biggest weapon to like put forward their own thoughts, their own opinion in front of the management, right? So here they don't want to give this access to everyone. So here they actually reduce this voting rights. Well then, now let us understand the same DVR shares from the perspective of general investors like us. So just recall what you will, if you are an investor and you wish to invest in a company, what are your like pre-check points which you will be checking before investing in a company? Like generally what I do is I go for a company which is at a lower valuation. They should offer like dividends should be there. The company should be fundamentally strong. It should be growing, right? So generally DVR companies are those who are actually running in a profit, and right, so they have already created a good trust in the market. So if they are offering a DVR and like they are telling you that since like they told you that okay, we are limiting the voting rights, okay, so we can't offer you the same voting rights which a general investor would be getting if they have invested in the ordinary shares. So what they told that in return of this, like in return of these cutoffs from the voting rights, we would give you higher dividends, right? So whenever we would be offering dividends, you will be getting higher dividends as compared to the ordinary shareholders. So this compensation attracts the investors, that yeah, if like for general small investors, they don't care a lot about voting rights, because that's not attractive for them. They don't even under check the minutes which were discussed in the meetings, right? Generally, so for them, like this can be a good option, that yeah, I am getting a good company also at a lower price also, because as I told you that DVR shares, they are priced lower. Like if a company is priced, let us assume at a X, so generally what will happen is the share of the DVR will not be X, it would be around X by 2 or something, like half of half or something less as compared to the actual price of the company, actual valuation. So this attracts a lot of investors, this policy, that yeah, they are even offering a higher dividends, the price is also low and the company is good, like it is performing well. So I can, if I have less amount also, I can go with the DVR shares. So I hope that you would have understood from both the perspective that why company issued these stocks, and why we general investors took a good interest in this, right? Well, now let us understand a basic difference between DVR shares and an ordinary shares, which is actually trading in the stock market. So as I just told you that these ordinary shares were actually there in the market from beginning, right? So they were the only shares which were trading. Then company came up with these DVR shares, right? So these ordinary shares, they never trade at a discount. We all know that. Okay, so they are always at a price which determines the company's valuation ultimately. So DVR shares, they were introduced at a lower price. Okay, they were initially introduced at a lower price, so it doesn't mean that why they are not at a higher valuation, because the company purposely introduced it at a lower price. So it was introduced at a lower price, so they offer a good discount on the same valuation. Like if you are interested in going for, like let's say take an example of Tata Motors. So for Tata Motors, the price out here is for ordinary shares 320 currently, and for DVI it's 150. So you can say that if I am interested in Tata Motors, and if I have a small investment to make, okay, so and if I don't want to go with like 320 rupees for a company, so I can go with the DVR share of the same company, Tata Motors DVR, where I'll get the same company, the same performance of the company at a lower price, right? So yeah, but we should also remember one more point out here, that is that prices of both DVR and ordinary shares move together in a similar manner. So it doesn't mean that ordinary share goes up like let's assume 3% or 2% and DVR shares were falling. This will never happen. They will be moving together in a similar manner. So if these shares bounce up, let's assume 2%, even they will be bouncing up, let's assume 2% only. Yeah, generally similar bounce will be observed in both of them. Now, let us understand the second difference. The second is the voting rights, which basically DVR means, right? So, what is the basic difference in these two? So, here let us again take the example of Tata Motors only. So, for Tata Motors in ordinary share, we get a 1:1 voting right. So what does this mean? I'll just tell you in a minute. Let us understand for DVR shares. For DVR shares, we get a voting right of 1:10 in the same Tata Motors. The company is same, everything is same. As I just told you that the management didn't wanted to give complete voting rights to them, so they have reduced it to 1:10. So what happens here is, let's assume you have 10 quantity of Tata Motors. So you will be getting, for each quantity you will be getting one vote. So for total 10 quantities you would be getting 10 votes. But here the scenario is different. Here they are saying that for one vote you need at least 10 quantity, which means if you have 10 quantity with you, you can vote one, means you can cast one vote only. So I hope you would have understood that if you purchase 10 stocks of Tata Motors DVR, it would cost you, let's assume it costed you 3,000 rupees, and in that 3,000 rupees, what you can do is you can cast 10 votes total. Here it is around 150, so for 10 votes, for 10 quantity, you will have to pay 1,500 rupees approximately, and in that 1,500, dividends will be the same, everything will be same, but for voting rights, when it will come, you will be able to cast only one vote. So I hope that you would have understood the basic voting difference which a DVR share and an ordinary share plays, right? Well, now let us take an actual example from the market. So this is ordinary share of Tata Motors, and this is a DVR share of the same Tata Motors. So basically, these two are representing the same company, Tata Motors. They both represent the same Tata Motors company, but this represents the actual performance of the company, and this is a DVR share of the same company. So, which one should I prefer? Like, you'll also have this doubt that which one should I go for? So, from my perspective, to be honest, like, see, there's not a big difference in the price movements, also, right? So, they both move in the same proportion only. Generally, they move in the same proportion, right? So, you can go for any of these. It doesn't matter that you need to go for this one or this one, right? You can go for any of these if you have some budget constraints or your funds are low, right? And but you want to invest in Tata Motors, right? So you can go for DVR share also. Okay. And as I have also told you that, they are deducting the voting rights, right? They have reduced the voting rights. So in return of like voting rights, they are giving you dividends. So generally, like in Tata Motors, let's take an example that Tata Motors goes into profit, and they tell that we'll be giving a dividend of, let's assume, 20 rupees, right? So for DVR, the rule policy for Tata Motors is that it would be 5% higher for DVR shareholders. So if they are giving a like DVR dividend of 20 rupees for general ordinary shares, for DVR they'll have to pay 5% extra. So if the dividend was 20 rupees, it would be 21 rupees for the DVR shares, right? So 21 rupees you'll be getting in DVR shares. So just think in a bigger picture that if you purchase, let's assume, 1,000 quantities. So for 1,000 quantities, you will be receiving from here 20,000 rupees as dividend, and for Tata Motors DVR, you will be getting 21,000 as a dividend, right? So the in bigger picture it plays a good role, like for dividends. So it is also one of the reasons why like investors wish to give a good try for DVR shares as well. So I hope that you would have understood the basic difference and all the key points which needs to be seen for ordinary share and a DVR share. I have, if still there are some doubts which are missing, you can put that out in the comment box. I'll make sure to cover them up all. Well then, that's it for the day. We'll be meeting in our next video. Till then, have a nice day. Thank you.